Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Unless you've been under a rock, you know that inflation is at 9.1%. It's the highest number since November of 1981. So in today's video, I want to discuss what we know about this number, what is there, what can we hope for, what are some good silver linings within this, if any, and then what you should do as an investor. So let's go ahead and kind of unpack this. So the thing is, the headline is 9.1%. It is higher than the 8.6 I think we had last month, and we were told, and we had thought and had a bunch of conversations around all these interest rate hikes. This should be peak inflation. This should be it, and it should come down, and that is going to be the sign that we can get out of this inflationary period and not run ourselves into a recession. Well, so far that hasn't worked. However, there is a phenomenon happening right now that I don't think enough people are talking about. I don't think people are really wired to talk about that either. So I'll get into that as well. So first, remember last week, I think it was last week, we had talked about how I see, and I think we all see this, is where we as investors, but especially as humans, we are hardwired to remember the negative in every situation. We remember the hurricanes, remember the blizzards, all these perfect days in between, nobody really cares about, right? So this inflation number is a live case example of that, because everybody's talking about the 9.1%. Everybody was talking about, myself included, gas and tacos and all of those things increasing in price. However, the thing that is understated this entire time, and I'll make sure that I put a graph here as well, is that gas prices have fallen the last 29 days in a row. Gas prices have peaked. And remember that the way that we comprise the entire, that 9.1% number, the highest contributors to that have been used car prices, gas prices, and groceries. That's it. Those are the biggest contributors. And one of those, gas prices, has been coming down for almost an entire month. Now the thing here is that when we talk about the inflation part of this, they take June's numbers. It does not include what we have experienced so far in July. Now I'm not saying all this to say that inflation is actually going down and that this is the peak, but I am here to say that there is a little bit of a silver lining, and that there's something else you should know about this. So again, November 1981, that's what everybody is talking about. If you invested just $100 in November of 1981, or at any point, let's say the beginning of 1981, your return will be 7,911%. Yeah, I think I'll take that, right? And that's not to say that the next 40 years will be the exact same as the last 40 years. We know that. However, again, the stock market tends to go up over time. It may not go up. It may not be positive in 2022, but we're not just investing only for 2022. I had some weird troll complain about what was going on and that they hadn't made everything they invested in November of 21 has been down. Well, that's only been a few months. It has not even been a year, and I don't know what you invested in. You could invest it in something stupid. I can't control that, right? However, as we've talked about here, and we talked about Hershey's, I've talked about a lot of different companies that tend to be good and have been green this year. We've already talked about making those types of shifts, but this is your opportunity to do that, but then also to look at the long term, because everybody's focused right now. Earlier this morning, the market was down pretty bad. Things have kind of shifted out, and we'll see what's going to happen. But remember, we've been talking about this for, what time? It was at least the last 2 weeks when I brought up and gave y'all all the dates that are going to shift the market in July. This is just the beginning of what could be a very busy month. Notice I didn't say negative, right? I'm trying to be neutral here. We've got the Google stock split, the GameStop stock split. Then we've got the recession numbers. I'm not doing these in order. And then we got all of earnings season starting next week. And some of that started this week. So there is going to be a lot of moving and shaking in the market. If you have been a subscriber, which if you are watching, you're not subscribed at this point in the video, you should definitely do that. But in either case, this is something that we have expected. Like, put on your seatbelt. It is going to be very busy. But as you're putting on your seatbelt, make sure that you're looking out the front mirror, out of the front, I guess, windshield here, because you want to stay focused on the long term. You have to stay focused on the long term if you plan on winning in investing. So before I let you go, I'll go over these just a few more points as we continue of what could happen next and what we already know to be the case. So I said rent. So in terms of the biggest contributors, I said used cars, gas, groceries. Rent is also one of those that is one of the biggest contributors as well. So rent also falls in there. That's one reason why I talked about Camden Property REIT very early in the year as being one of those real estate investment trusts that might be pretty good. So we can go back and check in on those numbers. The other thing that we learned today, or the things that, the cause and effect here, is you do want to pay attention to the Federal Reserve. We're going to find that out pretty soon on how they're going to continue to raise interest rates. But remember, this is always what happened in June. It doesn't factor what happens in July. We won't know what happens in July until August. So it's a little bit of a lagging indicator, which makes it hard for the Federal Reserve because they're always reacting to what happened last time. And that's why many people are already saying, I'm not sure if I agree or not just yet. I prefer to have confirmation. But that's why you hear people say, well, we're already in a recession. Well, the Federal Reserve is going to tell us what happened for the last 2 quarters at the end of this month. So it's always going to be a lagging indicator, and they're always going to be behind in that case. So gas prices, again, down last 29 days in a row. Federal Reserve will react to this information. And then Bitcoin also fell today, at least at the time that I was recording this and I pulled all this data and research, which further shows us that it is not a hedge against inflation. I've said that many times before, but for whatever reason, the Bitcoin bros don't believe me. You do what you want with it, but again, it's not a hedge against inflation. So if you are someone who is looking for, hey, inflation is really tearing up my portfolio, you have to move towards companies that have pricing power, that are able to raise prices incrementally without customers knowing, like a Hershey. I think they're one of the best positioned companies to do that, because you raising 10%, raising your price by 10%, you go from $1 to $1.10. I'm really not gonna care. If I am addicted to chocolate and I need chocolate, then that's just where I'm going to go, right? So it is what it is in those cases. But you also want to go towards companies in the healthcare space that are known to be sustainable and known to not go anywhere, and really move towards places that do well during inflation if you haven't already. We've done plenty of videos for that. Feel free to go through the search bar and look for those. They're already there. So those are just some of the things that you need to know about inflation. Again, this won't be the only breaking news video I do this month. I already know. It's going to be busy. It's going to be hard for me to keep up with all the news. But that's what I'm here for, to break it down and help you explain, help you understand what's going on by explaining it in a way that you understand. All right, so before I get out of here today, make sure that you check out the members only group, the new video about breaking down. I haven't really haven't narrowed down, that's the word I'm looking for, narrowed down the number of sites I'm going to cover, but we're doing the top, I would say top 5 or 10 tools that I use, so we'll kind of go over those tonight. It's going to take me a little bit of time to get all that in I don't know, I'm out of words today, a good box. So I don't want to do a 50-minute video. Also don't want to do a 30-minute video because it's a lot of time. So either I'm going to break it up into, or just do one like 15-minute if I can fit it in there. But in either case, that is coming out for our members only this week. For those that don't know, I do members only content every single week for $10 a month. That's it. So you get to do Q&As, you get to ask for company breakdowns, and give that all to our members. So make sure that you sign up for it with the link right here. It's been on the screen for a while, I assume. And then you can also go to the button right below the video, and it will probably be in the description like it always is. So that's what's going on with inflation. Stay tuned, subscribe, because it is going to be a very busy month. I've said it multiple times. I'll also put up the tweet with all the other dates, and that was just a summary because I can only put so many days on Twitter. So it's going to get interesting. Put your seatbelts on. Continue to dollar cost average. It's not a time to be scared, but it is a time to have a plan. All right, that's it for me. Talk to you later.